Rule number one, never lose money. Rule number two, never forget rule number one.
Ben Graham basically coined the term value investing. He believed in careful scrutiny of a company's financial statements, and that if you bought value, it would eventually prove out.
A few years ago, I went to Amazon, and sure enough, they had this manual there. So while reliving my youth, other guys were going to Amazon probably and buying old Playboys or something, but I bought old Moody's manuals instead. And when I got out of school, I started selling stocks. I was 20 years old at the time and looked about 16 and acted about 12. So I was not the most impressive salesperson anybody ever met. But what I would do was I went through page by page looking for possibly undervalued stocks.
Is this like going through an old family album?
Better. I was genetically blessed with a certain wiring that's very useful in a highly developed market system where there's lots of chips on the table, and I happen to be good at that game. Ted Williams wrote a book called The Science of Hitting, and in it he had a picture of himself at bat and the strike zone broken into, I think, 77 squares. And he said if he waited for the pitch that was really in his sweet spot, he would bat 400, and if he had to swing at something on the lower corner, he would probably bat 235. And in investing, I'm in a no-called strike business, which is the best business you can be in. I can look at 1,000 different companies, and I don't have to be right on every one of them or even 50 of them. So I can pick the ball I want to hit. And the trick in investing is just to sit there and watch pitch after pitch go by and wait for the one right in your sweet spot. And if people are yelling, swing you bum, ignore them. There's a temptation for people to act far too frequently in stocks simply because they're so liquid. Over the years, you develop a lot of filters. And I do know what I call my circle of competence. So I stay within that circle, and I don't worry about things that are outside that circle. Defining what your game is, where you're going to have an edge, is enormously important.
Warren would sit upstairs in his little office there, and I would bring up the name of a company, and most of the time, he knew much more than I did about the company. He'd know how many shares were outstanding, he'd know the capitalization, he'd know the earnings. It was absolutely incredible. I mean, when Warren said something, it meant a heck of a lot. And I think all of us paid a lot of attention to Warren when he took a definite stand on something.
When I first met Warren back in 1959, I recognized immediately that he was a very intelligent person.
For the last 4 or 5 years, the stock market has been booming along and presumably forecasting better business, which has really not materialized. So maybe the stock market is really correcting a previous incorrect forecast this time rather than making a new correct one.
He made a lot of money buying thinly traded securities that were incredibly cheap statistically.
Charlie Munger has had a big impact on me in moving me toward looking for wonderful companies at fair prices rather than fair companies at wonderful prices. And that was enormously important because it enabled Berkshire to scale up in a way that would have been impossible to do otherwise. Yep.
What are the key indicators you look for within companies before making an investment?
Well, I look for something that does give them a moat around it. We have a company called See's Candy out on the West Coast. See's Candy is boxed chocolates. If you give a box of See's chocolates to your girlfriend on the first date and she kisses you, we own you. You know, I mean, we can raise the price tomorrow and you'll buy the same box. You're not going to fool around with success. So the key there is the response. You do not want to go home on Valentine's Day and say to your wife or your sweetheart, preferably they're the same person, you don't say, here, honey, I took the low bid. It doesn't work. Price is, to a degree, is immaterial. If you've got an economic castle, people are going to come and want to take that castle away from you. And you better have a strong moat. You better have a knight in the castle that knows what he's doing.
You're not buying an asset, you're buying a name, you're buying a brand, you're buying a real franchise here.